The FHFA decision to allow Vantage Score is impacting FICO, and investors are asking me if I think FICO stock is a buy. I last visited this company in March where I told investors it was too expensive, and now I'll revisit the company, look at the latest results, and update that buy or sell recommendation. So let's jump right into it. So FICO has been one of those businesses, Fair Isaac Corporation, has been one of those businesses I viewed as being close to a monopoly. There are very few competitors, even though this latest result could increase the amount of potential competition. It still represents a very small fraction of this market right now that FICO dominates. And overall, FICO's revenue per credit report that they charge to lenders is such a small percentage of the overall transaction and such an important part of the overall transaction that its business has boomed over the previous decade, even though the overall market has not increased by all that much in that time. FICO's revenue has increased from 800 million in 2015 to 1.9 billion in the most recent trailing 12-month period. That's good for a compounded annual growth rate of 9.2%. Another thing I've really liked about FICO's business is it hasn't got distracted going into other business categories and using the cash flow it's generated from its lucrative business opportunity to invest in less lucrative opportunities. That's allowed the business to continue improving and expanding margins. Its operating profit margin has increased from 18.6% in 2015 all the way up to 46% in the most recent trailing 12-month period. An operating profit margin of 46% is near the best of any company I'm following. Remember, the highest operating profit margin of any company I follow is Visa and Nvidia. Nvidia's been going back and forth with Visa, but for the previous decade, if you average the operating profit margin, Visa has been the best in the selection of the companies that I follow at around 65, 67%. So at 46%, FICO is very near that top of the rankings of those businesses. So it's an absolutely excellent, lucrative business model. Close to 10% compounded annual revenue growth combined with an operating margin of 46% is a powerful combination, and you can understand why many investors have been attracted to FICO stock in recent years. Click the link below to watch the full video.